Hey everybody, Boris for BK Forex. Welcome to the weekly technicals for COM dollars, for Aussie dollar, dollar CAD, and Kiwi dollar for April 3rd to April 7th, 2017. Another low volatility week for the COM dollars, and I don't see any change or difference going forward. Yes, we have a couple of interesting event risks on the calendar. Yes, we have the RBA, of course, on Tuesday. Retail sales trade balance ahead of that. Both of them should be actually mildly bullish. We generally actually mildly bullish Aussie, so there is a slight upward tilt to the Aussie, perhaps maybe on the crosses more so than on the trade itself. But aside from that, nothing much really going on. We have the CAD trade balance. We have the Canadian employment, which should be pretty much in line with where the market anticipates it to be, and more New Zealand dairy prices. Nothing really to get anything excited about. We've just been in a complete and total compression stall on the commodity front, partly because U.S. rates have sort of started to come down. Commodity currencies are still at this point very much affected by the U.S. yield curve as much as anything else. Commodity prices have firmed, but not really rallied to an extraordinary extent. Caddy has been the only one that's really gotten a huge benefit out of the oil rally, and even that has petered out over the last few days. So we just seem to be trapped in these 100-point ranges for a whole week. It's just incredibly boring to try to trade these things. And in fact, the only way to trade them is essentially on a crosses, either pro or against the majors, because in themselves they really offer very few opportunities. I've actually stopped watching them on a day-to-day basis for the time being until I see some kind of breakouts. But on the Aussie dollar, the trade here is 77.76. It's been there forever. On the Caddy, 34.32s. It's a more interesting trade because it's a wider range. The Kiwi has shown a little bit of weakness earlier this week and then came back up. 71 is a reach, I think, at this point, but possibility. Let's take a look at the charts here and just see how everything shapes up. So here's the Aussie. You see the very low volatility compression of the Aussie. As a matter of fact, the Aussie last week was essentially a 50-point trade for the whole week, which is just really nothing. This big breakout, there was a 77s, just stalled again for the 6th, 7th time. We're moving back down to 76. Could that be support? Yes. A break of 76 certainly puts us down to 75, which again still preserves. I mean, on a longer-term basis, if you have the patience of Job, you can just simply buy the dips here because the upward trend still very much in place here. Aussie certainly looks relatively decent. Chinese data came in. By the way, actually, Chinese manufacturing came out was the best since 2012. Really suggests, I think, that China as a market has stabilized, and a lot of the worries about China collapse starting to fade away a little bit. Aussie certainly reflecting that. That doesn't mean that it can't just reinflate right away if should something bad ignite in China. But for now, it seems to be all quiet on the Western front at this point. They're all quiet on the Eastern front, where depending on which part of the world you're looking at it from. But the point being is that that whole region is not nearly as much of a cauldron of concern as it was just even 6 months ago. That's created, I think, a natural support for Aussie. You see the Aussie very much trading, I think, on an upward basis, but corrective moves here last week. Probably, I would say 75 becomes a pretty much an interesting value proposition point here if you're trying to buy it. 75.50 probably may be another one. So a lot of it will depend on whether the RBA surprises the market in any way, shape, or form. It doesn't look like the RBA is going to say anything, except it will just simply maintain its natural level of neutrality, and again probably job on the currency to the downside, just to make sure that you don't get any kind of a squeeze. At this point, 77 seems to be a very serious resistance. Now, what's interesting here, if the dollar weakens tremendously, this is the other thing. If the U.S. data kind of starts to stumble, and the market really begins to be concerned about the possibility of U.S. rate increases, that's actually positive for Aussie, and you can see the Aussie on a relative basis begin to strengthen. But aside from that, it's hard to find or extract any kind of a tradable theme here going this week. Now, dollar CAD has been trading well off oil, but even the move to $50 oil just couldn't break it down to below the 32s. Even the move to 32 on GDP. On better GDP numbers, couldn't really break it down here. 32 seems to be pretty decent support, and until and unless it breaks this 32, it's kind of hard to get super bullish. The loonie. Having said this, though, this was a very significant down break candle. It's 35 to 33 adjustment candle. And the near term trade so far, the momentum, even though it's taking a very, very long time to work itself out, is still a negative signal. You still have to trust the fact that this negative candle suggesting further downside action, certainly the possibility of 32. So the chance, gun to my head, I certainly want to be short dollar CAD than long dollar CAD against probably 34, 35 stop basis, because only then do you really invalidate this big short downside candle. But a move down here really opens up the potential here for a move all the way down to 32s. If we break 32.50, that certainly opens up the potential of the 32s. So CAD's still a mild, dollar CAD still a mild sell here. Just it may take forever for the thing to work itself out. And Kiwi, also another very quiet pair, but and Kiwi not really looking that great, but we did stabilize at the 70. 70 seems to be a pretty key support here. We'll have to see how well it trades. A move back up above 70.50 would make me a lot more bullish for Kiwi, just near-term bullish Kiwi, and suggest that we have 71 in view. So Kiwi is operating also. Kiwi is sort of operating on the inverse of the caddy, off this big bullish candle that we had, this 69 to 70 recovery candle. That candle still suggesting to us that there is potential for forward price action here. The bulls saw an opportunity. They're not really letting it go. And unless this whole sentiment unwinds from the low of this candle, you got to trust the fact that this is a buy to dip story. So caddy is a sell the rally story. Kiwi dollar is a buy to dip story in a very, very low volatility environment. If you like slow motion card chases, this is your type of a trade. Other than that, that's pretty much how the commodity dollars shape up. I wish you guys the best luck, the best of trading. Boris, over and out.